Hello and welcome to the final episode of our 12-part mini-series Harvestable. In the lead up to harvest, we have interviewed the most insightful minds across the agricultural industry, and we hope you have enjoyed. In this episode, we are joined by Richard Hewitt, Managing Director of Nimbus Broking.
Hi there, Ben Reid here, Head of Growth and Co-founder at AgriDigital, and today for our 12th version of Harvestable podcast, I've got Richard Hewitt from Nimbus Broking on the line. How are you, Richard?
I'm well, Ben. How are you?
Good, mate. Great to have you on board. I've known you for some time now, but I guess we thought today on this version of the podcast, we wanted to have a conversation around finance and I guess getting access to finance. And I know we'll talk a little bit in a moment about your business, Nimbus Broking, but yeah, I guess before we sort of get into that, I'll just give you a minute or two just to give a quick introduction as to who you are, where you grew up, etc., and I guess a little bit about what you're doing now.
Yeah, sure. Thanks, Ben, and thanks for asking me to have a chat. I appreciate it. So I grew up originally on the southern tablelands of New South Wales, so between Gunning and Crookle on a predominantly grazing property there, which was originally mainly wool. Now is still operated by my youngest brother. So diversified more into some meat production there as well. And from there, I spent a bit of time as a jackaroo out at Canamble and before university, and spent some years in grain trading, and similar to yourself, after university before going into sort of agri-finance, where I spent 9 years working for one of the major banks for the first few years as an agri manager there, and in sort of a regional manager, middle management there the last couple of years. And look, I guess I just saw in that experience from the early days an opportunity to work on behalf of growers rather than on behalf of a bank. So I eventually took the plunge to set up my own business, which is Nimbus, where we provide broking and sort of advisory services with the majority of the clients being farmers. So, we effectively provide advice to the farmers. We work with them in terms of compiling detailed professional submissions to banks in a bank-centric way. We try and make it as watertight as possible from a bank's perspective before the bank sees it. So we iron out all the questions, et cetera, that the bank's going to ask, and then sort of targets who we send, various applications to, what bankers we deal with, and all the way through the process to sort of maximise the outcomes for the clients from both the perspective of, getting the required finance and also getting it on terms, interest rates, conditions, et cetera, that are as favourable as possible for them. That's it in a nutshell, Ben.
Yep, well, I'm sure you've summarised it well in a few minutes, and I guess today really wanted to hone in on talking about getting access to capital, and I guess there's a few things front of mind for most, particularly for farmers, I guess, and there's obviously many people through the supply chain further, through storage and handling of grain, and obviously in the livestock sector as well. But I mean the pricing of land, I guess in the last 5 to 10 years. Particularly probably in the last 5 years, it's no secret that it's rallied strongly, and part of the reason for that, I guess, is the low interest rates that are available. But I guess I wouldn't mind just asking a question around, although interest rates are low and there's money looking for a return, is it actually easy to get access to that money and to that capital? And just maybe from your experience, talk a little bit about that.
Yeah, sure, absolutely. And it's obviously a really interesting topic that we deal with every day. There is no doubt, money is cheap, but in terms of accessing it for anyone who's probably been involved in that in recent years, it is more difficult than ever. And we mainly in agri deal with the major banks. Look, they are all keen to do agribusiness, to do farming loans. They want to do it. They see it as a good area. However, the process, the requirements, the hurdles to get there and the time frame that it takes are more onerous than ever. A lot of it derives, it was always probably getting a bit tighter. The Royal Commission that was held a couple of years ago accelerated that and has made the processes a lot more onerous than what they were previously. So it's a funny environment where we have a really positive agri sector. We have asset values going up. We have money that's relatively cheap. We have banks that want to lend in this space. However, the process to get that money is more onerous than it's ever been, I would expect.
Yep. Okay, that's interesting. And I guess how I always talk about being shovel ready or ready to borrow, I guess, what advice can you give people today in a succinct way, I guess, is to how can they best prepare themselves to be looking, if they're looking to access capital, how can they best prepare themselves for that?
basically have your house in order, I would summarise it as. I mean, the banks, obviously numbers and everything are important, but so are the people that the banks are dealing with, and their judgment of character is key in the process. Now, for a bank manager or their credit officer sitting in a metro centre, how do they judge character? They don't know, you personally. They don't know who gets up, before daylight every day, who the hardest working person is. I mean, I guess the way they judge that is how we present information to them, how accurate the information is, how timely it's presented, and how detailed it is. So I go to things like, yield histories. Like if people have a detailed yield history, the banks love that. It's very valuable. One, it's good information in terms of assessing cash flows and things, but it's also a great view on the client and their ability to record information and manage information, etc. Having, for example, ATO positions like tax positions up to order, like lodging BASs on time. They check all of these type of things, and this all comes back to character. And if it's not, and if it's being not in order, then it reflects negatively and can make it, can in itself be a deal breaker in terms of getting finance done.
Yep, it's interesting, and I hadn't actually prepared. I didn't pay you to say that before, Richard, but I guess we have one of our software platforms with a Waypath app, which we have in the market, which farmers use to track their grain, which we call from paddock to payment, I guess, but particularly looking at yield and grain inventory that you have, I guess, using something like that, or at least having, as you say, your house in order with records, historical records, and, as you say, current financial records in order. It sounds like that's the best advice.
Yeah, look, absolutely. And for the record, I didn't realise you had that product, Ben, but absolutely, that type of thing is gold. And there's obviously technology out there now that can make these processes a lot easier. I mean, it's only as good as the data that goes into it. And I would say sometimes some of it gets too complicated, and we just need to simplify it a bit to make it, easy and concise for the bank. They don't want, a 25-page report on yield histories. They want a spreadsheet saying, historically over the last 10 years, this has been the record, as in, area sown, area harvested, yield, grain received type of thing. So, but no doubt technology is helping to make some of these things easier for those who are adapting to it.
Yes, definitely. And so I guess then the other thing too is, I guess, money's cheap, but the serviceability is probably more of a question now, more so than the equity. I guess, as you talked about before, equity's strengthened. I guess that serviceability is the other main component. Yeah,
absolutely. So, in times gone by, security, equity were important. They still are, but as you outlined at the start with what land values have done, it's rarely a limiting factor now. And the majority of the time, the serviceability is the limiting factor. I mean, if I can just take a step back, really, I mean, banks can bore you with policy and fill rooms with paper if they, printed out all their policy. But at the end of the day, there's like 4 key factors here that they look at. 2 of them are related, and that they are, one, equity, and related to that is the security level that the bank has. They can be different, but obviously related things. The next one is serviceability, which is what we'll talk about now. And then the last one is, what we were talking about previously, basically what I call management, but that goes to the character piece and being organised and having things in order, et cetera, et cetera. But as you said, like in terms of the serviceability piece, there is no doubt that's 95% of transactions we do now. That's sort of the most limiting factor, and where we spend the majority of our time to cover that off, in terms of doing really detailed cash flows and explaining those cash flows, and not only just putting pieces, putting numbers on paper, but also having like production schedules and things behind them to explain how we got to those values, particularly from an income perspective. It needs to be, I guess, to be understood. And different banks have different policies, but they will largely normally then sensitise those cash flows. They may not agree with the commodity prices we've used. They tend to be a bit backward looking with them. So, they won't be using $9 or $10 a kilo for lamb, for example. They obviously won't be using current, canola prices or even wheat prices. They tend to be more conservative from that point of view. They will also, sensitise interest rates. So even if, people are paying 2.5%, they'll probably be working on 5-6% in terms of doing their analysis in the background. And the other point is that even if facilities are offered on an interest-only basis, as they often are, especially initially with a property purchase or something, then in the background, the analysis from the bank's perspective, the ability to pay principal and interest from cash flow over time.
Yeah, definitely. And you've talked a lot there about sort of the farm lending and particularly probably finance from, we'll call it the cornerstone banks. I wouldn't mind just quickly talking about, I guess, alternative finance in agri, and noting there are some newish entrants into whether it be livestock finance or equipment finance, or I probably just wouldn't mind understanding what you're seeing in that part of the world as well.
Yeah, look. There's no doubt over recent years, there's probably been more players in that space, and it has a place. It's it's interesting in that it's a gap that the banks aren't really filling, and often it comes back to why do people do that? Mainly, one is probably ease, and two has traditionally probably been security levels. That if the bank if the client, doesn't have sufficient security or equity to provide to the bank to get that additional funds they need, be it for the cropping inputs, be it for livestock, purchasing breeders or trading livestock or something, that these other guys are filling the space without having the same requirements as the banks. I don't know. It's an evolving area. It's an area that it works. At times it works. Obviously the funding is usually more expensive, but if it's that or nothing, then often it works to have it. So it has a role, and I think it's just going to be interesting to see how that plays out over time, because it certainly seems to be a growing area at the moment.
Yeah, that's good. Well, I guess part of the reason for me asking that question is that we as a business have been providing grain inventory as well as cotton inventory finance for grain and cotton buyers, as well as grain and cotton farmers for the last roughly 3 years, and we are looking at that space to grow into that space as well, which is complementary, I guess, to our software business as well. And as you pointed out, the big banks, I guess, aren't probably looking as closely at that area because maybe they don't need to, maybe they're comfortable, more comfortable being where they are, and maybe the opportunities in that area are not big enough for them to warrant looking at. But anyway, that's interesting, Richard. And I guess
I think it's a mixture of all those things. Why they aren't quite so active in that area. They tend to be very much bricks and mortar type of lending, and whereas some of this new finance, and as I'll probably understand as you do, you take the commodity itself as the security rather than actually needing bricks and mortar as security, and that's sort of a key difference to it.
Yeah, it is, and which is what we're doing. Taking the underlying commodity as the security, and I guess certainly maybe not as static an asset as a farm or farmland or bricks and mortar, but certainly still blue chip commodities that are well traded and I guess have a value in market, which is working well. And I think we're looking forward to continuing to grow that part of our business out. But I guess thanks for your time. I guess in closing, I always like to try and ask where I guess you as a business and probably the industry is heading in the next 3 to 5 years. You'd be interested to ask, where's your brain headed, Richard?
Yeah, sure. Look, I think starting from an industry perspective, it really feels like a fairly golden time in ag at the moment. We have, as you say, low interest rates the last couple of years, I guess depending on the geographical locations of your listeners, but it's been pretty favourable seasonal conditions on the eastern seaboard, at least after some tough years before that. We're seeing rapidly rising land prices. We're seeing people's equity in their balance sheets grow significantly, and commodity prices across the board have been relatively strong. So it feels like a golden period. We hope it continues, but inevitably there will be hiccups. But certainly the outlook at the moment is really, really strong. From just quickly from the perspective of my business and what we do, look, it has continued to grow sort of organically and with word of mouth. Reasons we've outlined with the finance and obtaining finance and stuff being more difficult than it was previously. It has made sense to people to outsource that. It's generally a win-win situation whereby hopefully we take some stress out of people's lives in doing that. We take some workload off their desk, and we generally get them a superior outcome than what they'd get themselves. So it works conceptually, and I think we'll see the industry continually go this way in terms of using an intermediary in sourcing their finance. And we also do some other advisory work and some day-to-day financial management for people, which as businesses get larger and as the world gets a little bit more complicated, it makes more and more sense, and there's more and more value in outsourcing some of these roles. So, we will just continue to grow along that as we are with the business, and certainly look forward to the positive future of agriculture, Ben.
Yes, well, as you say, here's cheers to the good times rolling, and we may not see 2 back-to-back years like we have in the Australian market, at least for most people, for some time to come. But if we can at least go back to some average, I think everyone will be comfortable to go back to some average years.
Absolutely.
As well. So, look, really appreciate your time, Richard. That's been great to go around all of that in the world of finance. And, we look forward to seeing how things progress into the next few years. And, thanks for your time.
No, it's been a pleasure, Ben. Thanks for asking me, and thanks for the chat.
Thank you for listening to Harvestable by Waypath. We hope you enjoyed this fireside chat. Have a great weekend,